The lessons. Are you started?
Yes, please.
Okay. So the lessons we are taking this time is patterns. It's about patterns. So we already know what patterns are, but then we are trying to look at what the different types of patterns and examples that we should consider and practice as we are going to trade. So we started with what? The triangular patterns. We did that yesterday. We did the wedges, ascending triangle, descending triangle, then symmetrical triangles. So yesterday, the video was recorded, audio was recorded, and it was shared. We have also done double top, triple top, double bottom, triple bottom. We are done with that one too. So today we are going to continue. In fact, the triangles, there is one last aspect that we are going to consider. After that, today we will do rectangular pattern. Then we will add additional 2 patterns. So let's pay attention. All right. So now I have the notes there. We can all go to what? The pennant pattern. The pennant pattern. If you are in the group, you can go to what? The pennant pattern. All right. The pennant pattern. So I'll be sharing my screen. Okay. I hope you can.
Yes, we can see your screen.
Okay, so the pennant is what? It's also more or less a smaller what? A smaller symmetrical triangle. So if you check, you can see it looks similar to what? Symmetrical triangle. So this one is not a bigger triangle like symmetrical triangle. But then I will classify it under what? Under the triangular pattern. So yesterday we learned that whenever we see a triangular pattern, it can what? Break out. It can break out to either side, no matter where it is what it is from. And we had some case scenarios where we can be certain about what? About the next direction of what? Of the moving asset. So even aside that, all that we have to obey is that once you draw a pattern, wait for it to break out before you set up your trade. That is, you set up your entry, your stop loss of it. So until then, if there is no breakout, please don't temper to what, or don't quickly FOMO. Don't quickly FOMO. Now with the pennant, it is what? A continuation pattern. It is a continuation pattern. So you will draw it similar to what? To symmetrical triangle. But then the meaning is that when an asset is moving in a particular direction, it will just go and rest. It will just go and rest at a point. Then it will continue the trend. So whenever you see a short consolidation, and when you draw the highs and the lows, and you get a pennant or a short triangular shape, put it in your mind that the trend is going to continue. So the pennant is what? Is a continuation pattern. So for this example, we have what? A long an asset moving in what? In an uptrend. and it went to consolidate and it break out to continue what the trend. So always take note the flagpole, unlike symmetrical triangle that you don't actually take consideration of for the flagpole. But here you have to see a flagpole. The flagpole that we are saying that you have to see a momentum in the trend. Like let's say if it is uptrend, you will see a massive momentum. In this example, you could see the flagpole is a massive upward momentum before the pennant will form. But unlike symmetrical triangle, that one it doesn't matter any flagpole. You can draw it anywhere. But then pennant we draw it for for short movement of the asset. So if you are a scalper, day trader, you can use pennants to trade. But then if you are considering for a long term, I told you most at times we use symmetrical triangles to trade for the long term. But either way, wherever it will form, we have the pre-knowledge about it. So pennant is a continuation pattern. So this is how it looks like, a short symmetrical or a small symmetrical triangle. Now, how do we trade it? How do we trade it? Now, as we were saying, it's a continuation pattern. So in this one, it is a bullish continuation. There is the flagpole is in an uptrend. It consolidated and it continued the direction. Then we have a bearish continuation pennant. So you could see it's the same shape, but then it will first coming from a downward trend. So the flagpole here will be a massive dip before it will consolidate and finally break out to continue the trend. So anytime you are trading pennants, you are not looking for a reversal. You just want to take advantage of the current trend. So if an asset is moving long and you want to also join them, once there is a massive momentum, you wait for a retracement and consolidation. If it forms a pennant, it means there is a likelihood that the trend will continue. Then what you wait for a breakout, you put your entry, then you put your stop loss. I hope it's clear. Can I continue?
Oh, please continue.
Okay. So this is how we trade the pennants. Now we are taking the bullish continuation pennant. So here we have gotten our flagpole. The asset is moving up. We have gotten our flagpole, and it is it is consolidating. So this is the breakout. This is the breakout. You wait for it to confirm the breakout. Once it breaks out, please, you can put an entry on your line, on your breakout line, in case it retraces. You can even place it to be the highest bidder. Maybe here you can buy it there, but then you have to take note of where you put your stop loss. Initially, you will bring your stop loss to the side of the triangle, this side. If it moves up for you, then you quickly bring your stop loss at your entry. Now, how do you take profit? When we were studying triangles, I said if you want to take profit, your first profit should be Should be the wide gap. No matter what this image is telling you, always use the wide gap to trade to take your profit. So we will bring this to wide gap here. That should be your target 1. It should be your target 1. So once you take the profit here, you can take like 50%. Then you bring your stop loss at entry. Then if it goes to your targets, the second target, the other target, then you take those profits alongside. But then make sure your first target is taken out, because anything can happen at that. Some go as far to measure the flagpole, some measurement at the flagpole, at the tip of the flagpole. But then it needs it carries an experience. It carries an experience to do that. But for the simplest way, always measure the gap or the wider aspect of the triangle, and use it as your take profit. At least take profit 1. Then if it continues more, then you take the other profits. I hope the explanation is clear. Can we continue? Hello?
Yeah, he will be playing today. Hello, sir.
Okay. So we are done with the triangular patterns. We are done with wedges, ascending, descending, symmetrical pennants. And now we are going to study a rectangular pattern. A rectangular pattern. So let me go. Now the rectangular pattern is also a continuation pattern, meaning the asset will move with a momentum, rest, and continue. It will move with a momentum, rest, and continue. So that one too, you have to consider a flagpole. So in this image, this is a flagpole. This is also a flagpole. You understand? So the asset will move, consolidate within a triangle, then it continues. So what you have to wait for is when there is a consolidation, you do You will wait for a breakout before you set up your trade. So the rectangular pattern is also a continuation pattern, just like the pennants. Okay. Okay, so we have a bullish rectangular pattern. So you see there was a bullish movement. Then it consolidated within a support resistance zone. Then it will break out. This is a bullish rectangular pattern. So bullish continuation pattern. The next image is a bearish rectangular continuation pattern. So you could see there is a downtrend. It consolidated within support resistance, and definitely it will break out to continue the trend. So once you are trading a rectangular pattern, just like the pennant, you should consider a continuation of the trend. Now, how do we trade? Okay, so in this image, this is a bearish continuation pattern. So there is a breakout. At this point. There is a breakout. So as we discussed for the other patterns, once there is a breakout, you put your entry at the neckline or the support. then you put your stop loss at the opposite side or in the middle. You understand? But then when you see a movement, you bring your stop loss at what? Your entry. So in this image, I have been talking about retracement, because once there is a breakout, there can be a retracement. So you saw here there is a retracement. That is why they put their stop there. But then if you enter and there is no retracement for you, you have to first put your stop loss here. Once the retracement is done, you bring your stop loss at the retracement. Then you do you wait for a continuation. So how do you take profit? For the rectangular triangle, it's equal size. So you just you measure one of the sides, then you use it at your first. You use it as your first target. You measure one of the side. You use it at your first target. Once you get it, you take profits. Then you wait for a continuation. Always remember to take profit at that point, because anything can happen. We are all traders and we carry the same sentiment. So maybe they can just hit that target and reverse back. So it's important. Please, are you okay with the rectangular pattern? Can we continue? If you are lost, let me know. Because today we have treated two continuation patterns, which is the pennant and the rectangular pattern. We are going to learn additional two patterns to end the day. Okay, so the next pattern that we are going to study is what we call the head and shoulder pattern. The head and shoulder pattern. The head and shoulder pattern. Okay. The head and shoulder pattern is it is a reversal pattern. It is a reversal pattern. And note, it is formed at at the top of an upward movement. So more or less, sometimes people tend to consider it as a triple top. But then there are difference. So triple top is also It's also a bearish reversal pattern. Likewise, the head and shoulder is also a bearish reversal pattern. So let's look at how they present. So in this image, you see the asset moving at moving upward. See, you see the asset moving up. It will go and leave some highs. You see the highs are plenty. It will go and leave some swing highs, meaning there will be a short consolidation. The head and shoulder pattern is a long term. So a scalper can take advantage of the various consolidations, but those who trade for the head and shoulder is for a long-term market analysis. Okay, so then it came to to also hit a support here. Then to go far again on top, higher than the first one, to signal a bullish trend. Then it will consolidate again. Then it will come back and what? And hit another and what? It moves. So immediately you get these two what? These two troughs. Or these two lows. Quickly, what you have to do is what? Is to draw your what? Your neckline. Immediately you get that two trough, because always immediately you get that, you quickly what? Draw your neckline to touch the two what? The two trough. Then you wait. With the head and shoulder, it will never go and what? And it will never go and supersede this high. It will never go there. So it will go and what? Go and create another high, almost similar to what? At the point to the previous two high. Yes, almost similar like this. Then you what? It will begin to what? Retrace. But then once you have your neckline and the head and shoulder is what? A bearish reversal pattern. A bearish reversal pattern. What you have to do is that your entry will be here. You'll be waiting for it. Even because you want to what? You want to short it. You don't consider wherever it will go. You just put your entry here. You put your entry here. Once there is a breakout, please, once there is a breakout, you put your entry here. So after putting your entry, you bring your what? Your stop loss at this place. You bring your stop loss at this place. Now, how do you take profit? This one, you have a lot of what? Lines to take profit. You can decide to use this interval. Lines contrast. You can decide to use first this interval, the interval here, as what? Your first target. Then you can decide to use the interval here as your second target. Then you can decide to use what? The larger as your additional target. Larger as what? Additional target. So at this point, please, you can either leave the market or you bring your stop loss at what? Entry. Then you will relax and take the remaining profits. I hope the explanation for the header and shoulder is okay. So in this image they have showed us perfectly. We have the neckline, we have the left shoulder, right shoulder, then we have what? The main man, which is what? The head. So the head and shoulder is what? A bearish reversal pattern. Then finally, what we are going to study is what? The inverse head and shoulder. And as the name suggests, is what? An inverse. So inverse means we are going to what? We are going to reverse whatever we said about what? The head and shoulder. So that one too, we have to see what? A bearish trend. It will leave us with a peak, consolidate here, one low, then it will continue. Then it will come and leave us with a peak. High is high. Then the others are trough, they are not peaks, Then it will come down with what? Another low. But then once you see the two highs, you quickly draw your neckline and wait. So if in case it goes and breakout, you put your entry. You put your entry here. Then you put your stop loss here.
Nana.
Then your take profit, you what? You measure here. We take the small one first. You measure here, target 1, target 2, target 3. I hope the explanation is clear. So let's go and see a diagram showing everything. So how to trade head and shoulder pattern. So you can see in this image we have left shoulder, right shoulder, head, shoulder. So entry is what? At the neckline. Entry is at the neckline. Then the stop is what? At what? The right shoulder. But then they calculated what? The profit from what? The head. They calculated the profit from the head because that is the limit. And they place it here. So they take their profit from there. Good. And with what? Please, if you are not getting it, let me know. And with the inverse, similarly, we have what? We have
Bro,
the left shoulder.
can you switch to portrait mode and let's see. I think if I switch to portrait here, your screen is very small. I mean auto
Okay.
rotate.
Share my auto rotate. Coming up, please.
Why if you don't officer?
So auto rotate.
All right, I think this one is okay for us.
Okay, is it? Okay. So, and we are almost done too. Okay, so for the inverse, this is how we trade. We have what? Our left shoulder, right shoulder, then the main what? The main dip, the main head. So we have what? Our neckline. So chairman also. Then we what? We put our entry on the neckline. But then in this image we measure what? We measure the head as what? Our target. We measure the head as our target. Then at that point we take our profit. Then we put our stop loss at what? The right shoulder. But immediately we go up quickly, come to your what? Your entry. We need to what? Manage our risk well, because this is one of my first lessons that I used to teach. The market is not our friend. So no matter how you know anything, if they are dipping, they are dipping. If they are going up, they are going up. So always we have to learn how to manage our risk. The market is not our friend. So let's go to Binance and see if open your Binance. Of course, we are going to BTC, USDT. But today, because it seems we finished earlier, but then let's go there. I wanted someone to or Binance. tell my WhatsApp to open.
Your screen is dark. Oh. Okay, it's coming.
Okay. I didn't check the market to see this type of shape, so see if we can get some. Of course, we know where to what to open our charts, where to expand, and how to open our drawing tools. I'm sure we know those things by now. Okay. So I said before you draw, you have to what? You have to switch off all your what? All your indicators. All your indicators. Okay. 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 Bullish. Yes. Do we see any similar shape here? Don't see anything for BTC. Let me go to 4 hours. Okay. Okay. We can quickly use this one for what? For inverse what? Inverse head and shoulder. Inverse head and shoulder. So now this is what? Okay, good. So here in this image, this is a 4-hour chart for Bitcoin. We have what? We have what? A low here. We have a low here. Please, have you seen it? We have a low there.
Yes.
Then we have what? Then we have what? Another low here. Then we have what? Another low here. So currently on the 4-hour charts right now, we are seeing what? An inverse head and shoulder. So our neckline for sure will come to this place. This will be our what? Our neckline. This will be our neckline. So here we have what? Our left shoulder, right shoulder, and what? And the leg, and the head. Sorry, and the head. But what is an inverse? Why are we saying inverse? The asset is trend. You understand? A down trend. Good. So what are we looking for? What are we looking for? We are looking for BTC to break. The noise is too much here. Pardon me. We are looking for BTC to break this neckline. Because maybe by today or tomorrow. Sorry. Sorry. So we are looking for BTC to do what? To break that neckline either today or tomorrow. If BTC is able to do that, we say what? We have reversed the bearish trend. We have reversed the bearish trend. Quickly, we put our entry there. Then we bring our stop loss to this point. To this point. So in here, if indeed we are trading what? The inverse head and shoulder for BTC. Then we are praying BTC should cross the neckline either by today or tomorrow, or by, let's say, next week. But in case BTC doesn't do that and it breaks the line below, then we will see we will see more dips. So for those analysts who are currently using the 4 hours chart, they are seeing this inverse head and shoulder pattern for Bitcoin, as we are also observing right now. So even if right now, if you will long BTC, if you will go long for BTC, you can enter long, of course, but then you have to put a tight stop loss, and that tight stop loss will be here. So once BTC cross that line and quick you out from your stop loss, it will continue to dip until it reaches the next resistance. I hope the explanation is clearer. Hello.
Okay, sir.
An analyst today, seeing this shape, please, what would you recommend for us? Should we short Bitcoin or should we long it? By then, you can consider the downtrend. But then, now that you have identified the heads and the shoulders, you can enter long trade. But then, put your stop loss at where? The 37.702. Then you can take your profit from this place. You can take your profit from this place. This place. Why? Because it may hit there and reverse. So you can take your profit from this place. So this is a signal for you. You can quickly do that and put your stop loss, please. This is a quick signal. So let's see if we can get an inverse head and shoulder. An inverse head and shoulder. Inverse head and shoulder. This is not an inverse head and shoulder. So here we are considering an up. Considering an uptrend. Okay. You can use one here. But then the first one is not supposed to be there. Let's see if we can get some. Okay. Since we are finding difficult, let's use this one for our actual head and shoulders. So here we have we have one high here. We have another high. By then, this high was supposed to be lower than the other high, but we are not getting some, so we can classically use it because we are seeing 3 highs there. Okay. We have another high here. Then we have another another high at this place. Okay. So now that immediately we get two, quickly we put our neckline here. We put our neckline here. Okay, so we put our neckline here. Great. So what are we expecting is that we want we want a breakout at this point. Okay. So you saw where the breakout was. It broke out from here. It broke out from here. But then it broke out from here. So once there is a breakout, you enter, you go and put your stop loss at this point. Then you wait for what? Your take profit, which should be what? The larger what? That should be your maximum target. That one should be from here. Yeah. You know, this is not a typical head and shoulder because even the head is giving a small profit. But then in a typical case scenario, we should get the head being larger than what the shoulders. Then you take your profit. But with that, this can be what? Also what? A triple top, because you see the highs are almost on the same support resistance zone. Almost the same support. So this is not a typical head and shoulder, but this is what? Triple top, almost the same support resistance zone, which you use the same neckline for your breakout. But as I was saying, if you are advanced enough, immediately you get the trade tops. You can quickly enter the trade at this point. You can quickly enter the trade at this point. Then you put what? You put your stop loss at where? Just like how I showed you the inverse head and shoulder at the head. You put your stop loss there. Then you wait. If they kick you out, it means the bullish will continue. If they don't, see the dip that what Bitcoin brought people from 45 to what 34,000, and it's a massive money. So those who saw that Bitcoin was forming what a triple top, actually during that period they made it by shorting Bitcoin, Then we are going to look for what? A pennant. We are going to look for what? A pennant. We are going to look for a pennant. Good. So at the point you have to consider what is actually forming for you before you make your decision. Whilst we did inverse head and shoulder, for this, someone will do different structure for it. Someone will do different structure for it. And then we should go for that penalty. Let's go to, let's say, the 15 minutes chart. Okay, good. So here there was a consolidation at this place, and we have drawn a line crossing the lows and a line crossing the high. Okay, so this will be my line for resistance. Then this will be my line for support. Okay. Please, are we seeing a pennant? Is this a pennant? Okay. So this is what? This is a bearish continuation pennant, because the flagpole is what? Is moving, bearish. It is moving in a downtrend. So this is what? A bearish continuation pennant. And you saw it after there was a breakout, which is what? This green actually broke out. But this actually confirm what? Confirm the breakout. This actually confirmed the breakout. So the green was closed above what? Above the resistance. So you put your what? Your entry there. You put your entry there. Then you bring your what? Your stop loss. You bring your stop loss either here or of course you can go as far as this high. And then those who put it at this place, they were what? They were kicked out. So you can bring it here, which is a reasonable point. Then after this confirmation, you bring your what? Your stop loss at what? At entry. Then you measure what? The wider gap. So let's see if the wider gap will come. So if we are considering for this, then horizontal, vertical. Let's come down. Why are you not moving? I'm paddy. Okay. So let's consider the wider gap. Let's say this. So if we are bringing it here, then where do we expect BTC to go? Good. We are expecting BTC to continue to what? To dip until this place. And of course you could see that this place is what? A major resistance zone for Bitcoin. So once it hits here, we take our profit, but then there is a probability of what? A reversal. And that reversal can be what? Can be for our 4 hours, whatever that we do here, the inverse head and shoulder. So we are done with what? Inverse head and shoulder. Let's see if we will get what? A rectangular pattern. So as we are learning, these are what we all learn, and we try to make meanings, and we bring signals to ourselves to take advantage. So it's not like we are not learning. Progressively we are moving on. Okay. Now in this image we can of course see a rectangular pattern. Okay, so it means we have to trade within what? Two horizontal, perfect horizontal lines. Let me use a straight horizontal. Okay. Then we have what? Another horizontal line. Since I'm using it for what? Quick something. And then we can use a real trend line for this. Okay. Let me use this mantra to help us. Please, you have seen how I'm drawing the support resistance. I'm making sure it touches what? At least three highs or 3 lows. So this is what we said. The rectangular pattern is what? A continuation pattern. So we saw what? We saw a downtrend. It consolidated within this rectangle, and what? And the trend continues. So once you see this quickly, you bring your entry here at the breakout point. Then you what? You put your stop loss here. Then you wait for what? You wait for your take profit. measure one side as what your first target. So at this place, this will be our what? At least here will be our first target. And you saw there was what? The retrace. Then if you are not kicked, then you go for what? The bigger targets. I hope the rectangular. So in this case, we have formed what? A bearish continuation what? Pattern. A bearish continuation pattern. Good. So the other one what? Will come when we search for what? When we search for what? Let's say let's see if we can get some. Well, for the bullish aspect, it can be a typical one. This is what it can be a typical what? A bullish continuation pattern. So also it did a false breakout. Please, yesterday I explained the meaning of false breakout and what? Failed breakout. False breakout and failed breakout. With the false breakout, let me take time and explain. The trend will what? Actually break out. But then immediately there is a breakout, it will quickly what? It will quickly come back to what? Your pattern. So this is what? A false breakout. It break out though, but it quickly what? Reverse. So we can false breakout here. It's what? It break out downward, but it quickly what? Reverse back. Then we have what we call what? A failed breakout. With a failed breakout, please permit me to show you some. That one, if it happens, there's a probability that it will not even continue the trend again. It will totally reverse it, and that is what we call a trap. So, for example, in this image, this is what? A failed breakout. Failed breakout occurs when what? An asset continue to what? To hit a particular what? Support resistance zone. Anytime it hits there, it is not able to break it, then it will what? It will come down. This is a trap. Don't be happy that, oh, we are closer, we will break. Before you realize, they will dip it over you. But for false breakout, sometimes there is what? A hope. Sometimes there is a hope. So I've taken the time to explain the two. Okay. So let's bring our rectangular pattern as far as this point. Okay. Because there were false breakouts. Now, here, the breakout happened at this point. The breakout happened at this point. So you put your entry. You put your entry on the resistance. Then you bring your stop loss below. Then if there is what? A continuation, then you what? You bring your entry or the stop loss at your entry. Then you measure what? You measure the rectangle. Let's say, of course, it can be here. And this point. Using an exact measurement. So you measure the rectangle and what? You take your first profit from there. If you are lucky and it moves, you take the next one. Then, of course, at this place, you can be kicked out. Yes. At this place, you can be kicked out. That's why it's important to always take your first profit at what? At that measurement. So, the signals that we bring, always our first target is what? Is more important to us than the rest of what? The targets. So today, I believe we have covered what we are supposed to do. and I am done. If you have any question or where you didn't get it, please let me know so that we can end the meeting successfully. Thank you. Please, any question? Wow, I read it. Please, I'm done. Any question? Or it's my phone?
We are having classes and we are done. You get it. Hold on. Hello. Should I end the meeting? Famo.
Yes, I'm done. I'm done.
All right. Okay, let me end it. Let me end it.